Hi, I'm Bekki Piper from Century 21 Miller Elite, and I am here with Diana Bunn. Why don't you introduce yourself?
Sure. Hi, I'm Diana Bunn with First Coast Mortgage. I have been doing mortgages here in Nassau County for over 20 years, and I'm so excited to spend some time with you today, Becky.
Yes, so we're going to talk about some current markets. What do you think a buyer should know about today's market?
Oh, that's a great question. Today's market is pretty interesting because we're seeing a lot of volatility in the market with regards to interest rates. And not the normal things are affecting interest rates. So it's not just like the 10-year treasury or what the Fed's doing. We're seeing global effects as well on what's going on in the market. Right now with interest rates, I think that they're at historic lows. They're the lowest they've been in the last 3 years. A lot of our loans were locking under 6%. So I think that's a really sweet spot in the market.
That's a great number.
Yeah.
Yeah. Do you think that buyers should be locking in their rates now, or should they be waiting float a little bit longer, or?
I'm a firm believer on locking an interest rate and a payment that you're most comfortable with today. I don't like floating the market because there's a lot of volatility. However, what's really wonderful about working with me and First Coast Mortgage is we have a free float down option. So once you are locked, you know that your rate is never going to go higher than it is today.
Oh, great.
And then in the possibility, if it goes lower while you're under contract and before closing, we could float down to the lower market rate.
Oh, that's excellent, especially for first-time buyers to know, because I'm sure they don't know anything about that. So,
and they're nervous.
It's very scary. It's a big purchase. So over to some pre-approval. So do you think that having a pre-approval can make your offer stronger to sellers?
Absolutely. I think pre-approval letters. So the difference between a pre-qualification letter and a pre-approval letter is pretty important to understand. So pre-qualification means that a lender's just looked at your application and they've qualified you for a mortgage. Pre-approval means the lender's actually taken a further step and they've pre-underwritten your file. They've looked at your income documentation, your assets, and they fully have structured it to make sure that it actually gets you to the closing table. So pre-approval letters have a lot more weight to a seller, especially in a competitive market, over a pre-qualification letter.
Okay, so that'll make a stronger offer to sellers from a financial standpoint. Absolutely. So that they would accept your offer versus someone who maybe doesn't have a pre-qualification or pre-approval.
Yep.
Okay.
Exactly.
Great. Are there any red flags that you're seeing to cause deals to fall apart? Is there anything that you've seen lately that?
There's a lot of red flags, but lately I feel like if you work with a lender that has experience, a lot of times those red flags can be addressed up front.
Yes.
And so later down the road, you don't have these issues when you get to the closing table. So experience does matter, especially when you're structuring loans that could be more complex. So as far as red flags, I would just make sure that you're talking to a lender upfront and getting a really good comfort level for the program and product that you're going to choose and the amount of money you're going to need to get to closing.
And I think it is super helpful to have someone local so that you have these big companies where it's really hard to reach someone about your loan and what's going on and hasn't been approved yet. Whereas you being local and some of our other local lenders, you're right there. You're able to answer quickly and answer questions at that time when needed.
Absolutely.
Yes. Yep. Great. So I know we have buyers currently that are worried about like hitting costs and things. What should they actually be budgeting for closing costs and things like that?
So closing costs vary based on the property type, the loan amount, and the loan program. So a lot of times what I tell first-time home buyers is to budget for at least 4% of the sales price in Nassau County when purchasing in Nassau County. So that's a number. But I also believe that you need to go further and give them an actual loan estimate once they've narrowed down to the home or maybe price point that they want to buy in. So they really have a true idea, because manufactured homes, for example, will have higher inspection fees than a single family home when it comes to most loan products. So it's just really understanding the program, the product, and the type of house that they want to buy.
Okay. And that's something that when buyers come to you, they can tell you, I'm looking for this type of a home. Can you explain to me and run some of the numbers for me?
Absolutely. Yeah.
Okay, great. Are there any mistakes that you see buyers making right now when trying to get a mortgage?
I think a lot of buyers think that they have to have the most perfect credit score, and that's really not true. I actually just closed a loan with a 513 credit
Oh,
score.
wow. Yeah.
So I think that there's a lot of misconceptions. And then some buyers think they need 20% down, and you don't. There's a lot of programs out there for first-time home buyers, 100% financing in Nassau County. So I think that there's more of the worry than is necessary a lot of times. And I think that home affordability is actually more obtainable than most buyers think.
And they just have to come and ask those questions to get those answers.
Yeah.
Are there any, you just mentioned about first-time home buyers, are there any other loan programs in Nassau County that people are able to get, or is it just mainly like for first-time home buyers?
There's a USDA product that Nassau County is eligible for. So it's backed by the Department of Agriculture, and all homes in Nassau County actually are eligible. And that's a 100% loan product, and you do not have to be a first-time home buyer.
Oh, wow.
You have to have certain income restrictions and affordability, like your overall debt to your income has to match that program. But it's a great program for Nassau County buyers. There's also a Nassau County SHIP program, which is a state housing initiative partnership program. And it gives you up to 25 or 30% down payment assistance.
Oh, wow.
For lower income households, they might qualify for that, which is a really wonderful program for Nassau County purchasers. And that is for first-time home buyers. So those are the two mainly specific for Nassau, but then there's a lot of programs out there available.
That's amazing. So that means that people who think that they can't afford something may actually qualify, and a lot of times you can get mortgages. Your monthly payment can sometimes be less than rent. So
I see that all the time.
Yeah, it's definitely worth looking into. So if a buyer plans to refinance later, what should they prioritize in a loan currently? Is there a way to work that in so that they're paying less and then they're able to refinance later?
With refinancing, there's no crystal ball, but the hope is to be able to obtain a lower rate in the future.
Right.
Sometimes people are selling a departing home, but they're ready to buy the new house today. So those tend to be more refinance options that we'll look at. So I would try to look at a program that would be the lowest in closing costs, because you're going to have closing costs again for the refinance. We probably wouldn't suggest paying discount points if we know that we're going to be refinancing down the road. A lot of times with refinancing, it's basically their intention. Do they want to lower the term? Maybe we can remove private mortgage insurance. Is the interest rate lower? Do they need to pull cash out later on to purchase something else? So it's really hard to say until you dig into the meat and the potatoes of it.
No, that makes complete sense. So if someone's looking to buy in the next 3 to 6 months, what's the best way to go about that? What's the process with you?
I would suggest that if your timeline is 3 to 6 months from now, go ahead and start the pre-approval process now. That really gets us to allowing us to actually narrow down the programs, the products, and the purchase price that you should be showing them the houses, right? Sometimes buyers think that they can't be approved for a certain amount, and they actually can, or they're might have a beer budget on a champagne taste or something like that, and we might have to manage those expectations. I would say it's never too early. The cool thing about pre-approvals is they are good for 4 months, but now we just pull a soft credit pull. So nothing hurts their credit. So there's really no reason for them to stall on the pre-approval process, because the more information up front, I think the better prepared they're going to be.
Great. Awesome. And what would you tell a buyer who's on the fence right now about starting the process, whether it's because of the rates or they're just scared?
Yeah, it is scary. It's also really exciting to buy a house.
Yeah.
And a lot of times I think it's more of that fear comes from the not knowing and getting off the fence. Sometimes just getting the information you need as far as down payment, the programs that you qualify for, maybe the price range, all of that kind of takes away the fear once they have the information. So a lot of people are fearful. They think there's never the perfect time to buy a house, or there is the perfect time, but you don't have
right. No, it's when you feel comfortable, and especially if you feel comfortable with your realtor and your lender, and you're able to work through that process on your timeline as a buyer's timeline, and we work with them through what they're comfortable with. And looking at homes is the fun part. And then the financial is maybe not the most fun part, but because you have so much experience, you're able to walk people through that.
It made you more comfortable with the process. One thing I will say for those buyers that are off the fence and they're trying to figure out the best time to purchase, I'm a big believer in making sure that the home that you buy and the purchase price that you have has a comfort level in the house payment that you're going to be committing to. And if you're comfortable with that payment, then it really doesn't matter the timing. The timing is when you find the right home.
Exactly. And that's the good thing about here in Florida. Any time of year is a good time to buy a house. You don't have to worry about digging out of snow or anything like that. So all year round is a great time to buy. Diana, thank you so much for joining me and answering all of my questions.
Thanks,
and I'm sure we'll be doing this again. Bekki Piper, Century 21 Miller Elite.
Diana Bunn with First Coast Mortgage.
And we'll see you again.
Thanks.